Hello and welcome. Hi everyone. Today's session is on ESG and the role of internal audit in that. You're very welcome to this Head of Internal Audit session. My name is Eileen and Healy and we have been running these sessions for the past couple of years and mostly online. Today we decided to do a little bit differently, and instead of having more roundtable format, we're going to have a fireside chat. So in that regard, I am delighted to have Marc Aboud, who is our sustainability risk lead with us today. Eileen Healy is my name. I'm a partner in risk advisory. I work in sustainability assurance. I work with Marc some of the time, and we've had many of these conversations, but we're going to record this one today and look forward to the conversation with Marc. So Marc, do you want to introduce yourself?
Thanks, Eileen. It's great to have the conversation in person with you as well. So as Eileen said, my name is Marc Aboud. I'm the director in our risk advisory department, and I specifically focus on our sustainability risk offering. My background is actually in internal audit. So as well as the day-to-day being involved in sustainability double materiality assessments, scenario analysis, climate scenario analysis, and sustainability reporting, I do work very closely with Eileen as it pertains to assurance and internal audit as well. So delighted to be here.
Great. Thanks, Marc. So before we kick into the question and answer session with Marc, I just want to level set on ESG and what we mean by ESG, because I know there's a lot of talk around climate, and in fairness with our clients, we spend a lot of time talking about climate, but ESG is not just climate. So maybe just to zone in briefly on what we mean by ESG. So the E part is obviously environmental considerations, and that is, largely climate change. But it's also the biodiversity crisis and our response to that, the biodiversity crisis that we have on our planet, both in terms of flora and fauna. So that's a key part as well. It's also what we would like to have is the sustainable use of natural resources. At the moment, it's probably unsustainable. So we need to, look at that as a consideration and look at how as a business, we consider that and our response to that. And I suppose that's where the circular economy comes in to play. So three components there to the E element. Then on the S element, which is the social element, probably two primary considerations there as I would see it. So firstly, the employee or the workforce consideration, and that's where, and I'm sure a lot of organizations dialed in today, and I know many of you dialed in today have diversity, equity and inclusion initiatives in your businesses, and really you're looking to ensure that the employees, the teams, the people you work with feel included and that you have diverse thinking in your decision making. So that's certainly a consideration, and that we're not excluding anyone, as we look to recruit and retain. The other consideration on the S side is really around looking at our supply chains and our third parties and our fourth parties, and making sure that wherever we operate geographically and whoever we rely on geographically, that all those people are treated with respect and fairness and are paid a fair day wage for the work they do, and that there isn't any non-compliances in terms of human rights abuses, labor law abuses, etc. So that S piece is very important in relation to supply chain, third and fourth parties, and obviously as well the S piece is around our communities. The impact we have on our communities is a very important consideration there as well. And finally, the G in the ESG is the governance. So the governance structures we have in our organizations, and in particular how open and transparent those governance structures are to our stakeholders. And that really is key. And so some of the disclosures, and we'll talk about reporting, would very much, that are coming in the future would very much, expect, openness and transparencies around governance. So that's ESG. That's probably the most I'm going to say now, Marc. The rest is all questions. Your good self.
No pressure.
So I suppose, Marc, we're living in very interesting times.
Yeah.
There is a lot going on, and ESG is has come at us very rapidly. It's not that we haven't been talking about it for a long time, but there's certainly an acceleration in the expectation around how businesses are going to respond. So maybe give us some of the highlights of what has happened in recent times to really focus everybody on ESG.
Yeah, sure. And it's probably a good place to start from a macro perspective is COP27 and some of the outputs from that. I think many of you on the call today would have heard COP27 held in Egypt earlier this month, relating to climate change and how to move the dial in relation to that. And I think not to start off on too much of a negative note, unfortunately, but the market focus post that has been quite underwhelming. I think there's been a couple of positives that came out of it, right? So firstly, focus on adaptation. So a loss and damage fund being agreed by developed countries to focus on developing countries that are impacted by climate change significantly. So I think that's a positive thing and a step in the right direction from an adaptation perspective. But the nitty-gritty in terms of that deal is yet to be agreed. How much, who's investing in what. So I think in principle, it's great, but I think more to do there. I think another positive are possible changes or discussions being initiated in terms of some of the macro institutions that govern kind of society, like the likes of the World Bank, the IMF, are looking to implement climate change related measures, which have a significant filter down impact to other organizations as well. So I think two positives there, loss and damage and some of the potential changes to some of those global institutions.
And maybe just ask, do you think the COPs work? You know what I mean? Like we're at COP27, COP28 coming on. Do you think we can achieve all our ambitions without them, or are they an essential ingredient?
I think we need them, but I think it's commonly agreed that they need to change. And I think even the leader of, or the organizer of COP, or the COP agenda, has been quite outspoken in that in terms of next year's COP28 held in Dubai next year. There'll need to be some changes based on how it's been performing over the last couple of years. Okay. So I do think it's needed to bring countries together, particularly high emitting countries versus developing nations and developed countries.
Have them all at the same table.
Have them all at the same table from a transitionary perspective. But I think something does need to change in terms of future COPs. Okay.
So what else is kind of on the agenda currently?
So I think to round off on the COP piece, I think there were some positive outputs out of it. I think from a country perspective, global baseline targets still need to be worked on. We've talked about 1.5 degrees as being the target that we must achieve from a post-industrial carbon emission perspective. I think more needs to be done there from all nations and our nation included in that. And I think as well raising the bar and certain ambitions that were set last year at COP26. I think further work in terms of phasing out coal and other fossil fuels needs to be done there, which is extremely challenging in the scenario that we're in terms of energy crisis and the war in Ukraine.
Yeah, and I suppose there is much concern that we're not going to meet the 1.5 target, that we're going to actually overshoot it, and we're going to end up in a place where we're kind of trying to not get to 2 and stay as close to 1.5 as possible, and the world would look very different if we go far past the 1.5.
Absolutely, and the general scientific consensus is that we are going to overshoot it, and it is hanging by a thread. And mitigation alone isn't going to maintain us below 1.5 degrees. We're now at a point that we're going to need to rely on technology, carbon removal from the atmosphere. So I think in terms of the next couple of years, in terms of innovation and carbon technologies in order to facilitate and accelerate that over the course of the next couple of years will be really, really important.
Yeah. Okay. And I suppose there's obviously another dynamic in the mix now as well. You might talk to that, which is the invasion of Ukraine and what that has done in terms of the energy crisis. So maybe talk to us a little bit about that and the relationship with energy transition.
Absolutely. And look, nothing positive really comes out of war. However, what the war has awoken the world up to is the fact that we cannot rely on fossil. We need to transition to renewable energy. We cannot rely on one source of energy or gas-related energy going forward. So I think that's a positive in the sense that there is a recognition of the need to transition and to transition rapidly. However, there are significant challenges. Energy security is one of them as an example. So as gas is becoming more expensive and the pipeline is shutting down, etc., from Russia, nations are turning to stockpile on coal, another fossil fuel or high emission fuel, which is a challenge. Another challenge is there's significant transitionary minerals and materials such as copper, nickel, that are key components to solar panels, EV batteries, etc., that are developed or harvested or you name it, mined out of Ukraine and Russia, which creates a significant supply challenge. So if we are looking to transition, that is one of our challenges of the course. So there's a number of fronts that does impact us.
Yeah, I suppose we're in a crisis in terms of the energy crisis, and energy transition will definitely play a part in getting us out of that. I think the problem statement is energy transition won't happen fast enough.
Exactly.
So this piece around moving from, like say a hydrogen-based economy, that is going to take a significant period of time,
Yes.
and a significant amount of investment and a significant amount of collaboration.
Yeah.
And we might talk a little bit more about that later. But I suppose the other big ticket item that really is, in the minds of everyone that's joined in today and all businesses that we deal with is reporting. So that's coming at us now thick and fast. So maybe talk just a little bit about that.
So I'll try and do this as best as I can over the course of the next couple of minutes. So there's reporting coming from multiple jurisdictions, and it's probably best to talk about the EU in the first instance. They're the most advanced and the most aggressive, so to speak, in terms of future sustainability reporting coming down the line. So the EU have structured themselves with a number of upcoming regulations, some of which have materialized or crystallized so far. But they're with the premise of three underlying principles: to redistribute capital flows towards more sustainable activity, to embed sustainability and climate into risk management and capital allocation as well, but also to foster transparency disclosure requirements as well. A key component of three primary regulations from an EU perspective is the EU taxonomy, which is effectively a dictionary or a language to categorize what is sustainable for your organization from a revenue, capital expenditure, and also an operating expenditure perspective. That dictionary sits in the middle of two other quite large regulations. One, which is crystallized already, called the Sustainable Finance Disclosures Regulation, which is primarily targeted at asset managers and investors to categorize funds as green. And there's different categories and how you can categorize a fund as green, whether it's dark green, its sustainability objective is to the core of being sustainable, light green, where there's certain characteristics of being sustainable, and then non-green.
Now that's new news to me, that they're now varying the shade of green.
There are varying shades of green, and it increases the complexity and the challenge of it as well.
Okay.
On the other side of the EU taxonomy, if you think about that as the investment lens, is the corporate lens. And many of you would have heard over COP27 of the Corporate Sustainability Reporting Directive and the standards being agreed over the last month or so. The Corporate Sustainability Reporting Directive effectively supersedes a pre-existing directive called the Non-Financial Reporting Directive, which is targeted towards large PLCs in the EU. So about 10,000 firms. The Corporate Sustainability Reporting Directive will apply to 50,000 firms, both PLCs that are listed in the EU, but also large limited companies as well, and also large SMEs that are listed over time as well. This will be rolled out on a phased basis, starting in 2024, reporting in 2025, and will require a significant uplift from a governance, data, team perspective. Digital reporting will be required, similar to financial statement reporting in a HTML format. There will be mandatory limited assurance that will be required, application of standards that are developed by the European Standards Reporting Board. There will be a multitude of things: transition planning, future looking in terms of scenario analysis. So that there will be a lot in there, and there will be a mammoth regulation to comply with. So that's the EU in a nutshell. The SEC and Securities and Exchange Commission in the US are also planning ahead with their own reporting standards over the next couple of years, and have issued consultations in that regard. It's a primary focus on climate from an SEC perspective. So the breadth is narrower, but they have focused in terms of the depth, in terms of scope 1 and 2 reporting and scope 3 reporting if it is material to an organization. So there are some consistencies with the EU and what they're reporting out, but there are differences as well. Yeah,
and I suppose the SEC is quite climate focused, whereas CSRD is very ESG focused, going back to my explanation at the outset.
Yeah, and there's two, so that's one of them. And then also how philosophically, how an organization looks at its materiality. So the SEC has taken quite an investor-led approach and looking at singular materiality, so how climate or ESG matters impact your organization from a financial perspective, whereas the EU have taken a double materiality perspective. So not only how climate and ESG related matters impact your organization, but how your organization impacts climate and society at large as well.
Yeah. So a couple of points to note there, and I might try and recap them in a second. But TCFD, where does that fit in then?
So TCFD is an interesting one. It's probably the most mature climate-related disclosure standard, but it's made mandatory in some jurisdictions like the UK.
Yeah.
The TCFD is a really useful framework, particularly because it focuses on governance, but also the scenario analysis that's included in the strategy section. So looking at various scenarios of the course of the next 100 years as an example, and what that means for your organization, because with climate change, it's one of those ones that you can't embed into your strategy over the next 5 or 10 years. You need to think about it over a longer term horizon. These regulations, so the likes of the SEC, have based themselves on TCFD, and the EU Corporate Sustainability Reporting Directive has utilised many of the principles within TCFD. So reporting on TCFD, you can't go far wrong by starting with that in the first instance. It's also important to note as well that there are the seeds of global convergence on the horizon. So the International Sustainability Standards Board has been convened by the IFRS Foundation to develop effectively IFRS standards.
So that's the ISSB that we hear talked about.
Exactly. Again, they have 2 prototypes out at the moment, one on general sustainability and one which is more detailed on climate. So again, they've taken a bit of a climate first focus as well, and based themselves largely on the requirements from a TCFD perspective. But the point at which these various global initiatives are going to converge is still yet unknown. And I think there's still a lot more to happen.
Yeah. Okay. So that's been very useful, I think, just to kind of see where we're at. So we've talked about the COP, we've talked about the outcome of COP, and the fact it was underwhelming. We've talked about the 1.5 degree ambition and the fact we're possibly going beyond that now. We've talked about energy crisis, energy transition, and we've talked very importantly about reporting. And so the one point I would make to everyone listing in, there are some UK listed clients listing in, there are some US, and there's also, I suppose, Irish Indigenous, and CSRD is definitely, I suppose, for all of those kind of the common denominator. Then some may have to comply with TCFD, some may have to comply with SEC. With CSRD, one thing I heard you say there, which from an internal audit perspective is interesting, which is that there will be mandatory limited assurance. Okay, and while obviously that would be done by an external body, I think it's important to recognise that internal audit may have to help with some readiness there. Absolutely, I would say. Yeah. So we might come to that in a moment, but with all of that, given that our audience today is our business is based in Ireland, albeit some US, UK listed, and so forth. So we talk a little about what all this means in the Irish context, and even in terms of the energy crisis and energy transition. Given where we are geography wise. Yeah. What it means, and also given where we are in terms of our own climate action plans. Yeah,
sure. So there's probably 3 things to call out here. I think the point you made about CSRD is a really valid one, particularly where we're located and the global organizations that have EU headquarters here. Believe it or not, they will be impacted from a CSRD perspective, and dependent on their size, will need to report on a global basis from a CSRD perspective. So I think not only the Indigenous companies that are listed or reside within the EU, or within Ireland, but also global organizations that have EU headquarters here. So I think that will have a significant impact from an Irish perspective and the organizations that sit within this country. I think secondly, from an energy perspective, we often talk about the risk from a ESG perspective, but I think there's also a significant opportunity. And I think from an energy security perspective, Ireland could potentially play a really interesting and key role from a renewable energy perspective, given its location in terms of wind energy, how that's harvested, how that's stored, potentially by innovative technology or hydrogen-based technology, and potentially exported to other nations. So almost like Saudi Arabia of renewable energy. I've heard that term before. Could be a potential opportunity for a country like Ireland.
Yeah, I think and I think the offshore piece in particular, offshore wind,
Yeah.
if we can capture that, convert it to hydrogen. I think there's a real opportunity there. And talking to our colleagues across Europe and in other Deloitte member firms, they look at Ireland with envy to an extent because of where we're located geographically and because of that opportunity. So I think that's an important point to make as well.
Absolutely. I think the third point, the climate action plan, and you've probably seen a bit of this in the news as well. The 17th, or I believe it's the 17th of December, or mid-December, probably one of the last acts of this current government, or under its current leadership, will be the approval of the climate action plan, which will result in legally binding agreements for our decarbonisation measures. So, to put that into context, we've got measures to reduce greenhouse gas emissions by 25% in our agricultural sector, which again, very politically charged and a lot of work to do there, and up to 50% as well within the transportation sector. So thinking about our own infrastructure in terms of our public transport systems and and how
our dependence on roads as opposed to
our dependence on roads and how that will work will be significantly challenging, of course, the next few couple of years. I think this for the first time is actually putting legally binding accountability on our civil service and also our state agencies as well. So although climate change and ESG matters has been at the forefront of some of these agencies from a principle-based perspective, this will now become legally binding and we'll see a lot more structural reform hopefully over the course of the next couple of years.
Yeah, a lot more focus indeed. Okay, given that our audience today is predominantly heads of internal audit,
Yes.
Okay, maybe we need to now kind of say, okay, a lot going on, clearly. So what is the role of internal audit in all of this?
So we have our point of view on internal audit 4.0. We had to put a typical 4-point framework, being a professional services firm to us.
Yeah.
And going through each of those 4 items from an IA perspective. So the first one being assurance. So as we mentioned already, from the CSRD perspective, mandatory limited assurance, which will transition to reasonable assurance.
In about 6 years, I think, after adoption.
Exactly, over time, will come into play. So internal audit has a key role to play there to get the business ready and to provide that scrutiny over ESG related matters. So I think assurance is the really important point.
Yeah.
Second point is in relation to advisory. And I think without compromising internal audit's independence, how internal audit does 2 things: integrates ESG related matters into all internal audit plans or insert the scope of all internal audit reviews. We often see fraud as a key consideration of our internal audits. We often see data being a key consideration of our internal audits. I think integrating the likes of ESG into our internal audits as a key consideration will be really, really important to make it.
And I think it'll, because of the E, the S, and the G, I think there'll naturally be a play on ESG in most audits.
Exactly, and I've had this conversation with many in internal audit roles, and it's hard to argue how you can't. If you think about a procurement audit, there's a sustainable procurement element, there's a supply chain element. If you think about internal financial controls audit, there's a governance, there's a reporting element. You think about your existing audits and what ESG elements might be overlaid within that. So I think that's an important advisory point. Second point from an advisory perspective, I'd say, is readiness.
Yeah. So
there is a lot coming down the line from a reporting perspective, how your organizations are reporting on that early, and the role that IA plays from not necessarily an IA review or internal audit, but a readiness review to help support that process and get engaged early to help the business on that journey as well when it comes to reporting. Find the gaps early and prevent them in the first instance, rather than detect them. So I think assure, advise or cover the 2 points there. The third point in our framework is anticipate. I think these are existential risks of our time. If you were to look at the World Economic Forum Global Risk Impact and Likelihood report on the top 5 risks by impact and likelihood. 10 or 12 years ago, the world faced an asset management crisis. Whereas if you were to look at that world today, it faces an ecological and social crisis. So the extent to which your organization's risk and control frameworks, risk appetite, risk infrastructure actually align to these risks and integrate these risks is really, really important. And I think IA has a really important role to help the business anticipate what they are. And then finally is accelerate. And I think, I covered readiness over the advisory piece, but I think this is where internal audit can help accelerate for the business, where they come in early, do a readiness review, and spot the gaps early, and then incorporate it in to help prevent rather than detect risks after they happen.
Yeah, I think those World Economic Forum risk profiles are really interesting.
Yeah.
And it's really interesting when you look at them over time and how they have evolved. And you're right, climate is up there in a number of categories now, and biodiversity.
Yeah.
So I think that's very interesting.
Yeah.
Maybe just to drill down a little bit, and we've talked about this before, in terms of specific things that internal audit can kind of consider and look at. So, organizations need a strategy, they need an ambition, they need an implementation plan, and around all aspects of ESG, but absolutely around climate and decarbonisation. And then they need to report and disclose around that. So on those 3 specific things, where do you see internal audit kind of coming in to add value and also to provide assurance?
Absolutely. And, I believe that ESG or sustainability, that journey is a series of steps. Mm-hmm. And many organizations start with the integration or the end, how do we report on this? But I think it's really important to take the first step. So the first step is governance. Mm-hmm. So tone at the top, who is accountable for this? Is there a sustainability committee? But who's accountable at board level? Yeah. Is there an INED or an independent non-executive director that has been assigned or given a remit from a sustainability perspective? Who is accountable at executive level? And so we've seen the CEO being accountable, and we've seen that transition to the CFO over the course of the last year with a lot of the reporting requirements, and also the CRO from a risk perspective as well. So who is accountable at executive level, not only at manager level, but at that top level. So I think that is really important from an internal audit perspective, and the first thing to kind of consider or take a look at. The second thing is risks are different for every organization. The risks for a hard to emit or hard to abate manufacturing company is very different to a betting organization. The E is more prevalent in the hard to abate one, and the S is more prevalent in the betting organization, as an example. So I think doing a materiality assessment or looking at the business's materiality assessment and starting to transition to the double materiality assessments, how that impacts your organization, how your organization impacts society at large is really, really important. I think that forms the basis for internal auditors to focus on, the right strategic initiatives from a sustainability perspective. Then, considering regulatory gap analysis, readiness, and what steps an organization can be doing today to report on them, to help build that muscle from a data and a reporting and a team and capability perspective. Yeah. So I think governance is key.
Yeah. And just on the materiality assessment, I suppose from an ESG perspective, a materiality assessment in my mind is all about impact. It's all about looking at ESG and considering the business's impact. And as you say, the point which your betting company is going to have more of an impact in the S than the E, and the manufacturing on the E than the S. And not necessarily so always that's by a blanket statement, but absolutely. I think that's important. So I suppose what we're saying is governance, gap analysis, readiness, all of those things are areas where internal audit can play a role, certainly in that advisory piece.
Absolutely.
And in time, I think on the assurance piece, but obviously, we're in early days yet, so maybe advisory is more appropriate. So from an internal audit perspective, maybe we should just talk a little bit about some of the challenges that internal audit faces as it goes to be involved in ESG and to provide reporting back up to the audit committee on it.
Sure, and we're having multiple conversations, yourself in that regard. And there's probably, 4 primary challenges that we're seeing out there. The first one is operational, and that's an umbrella for many, many things, how to structure your internal audit team, how to plan ahead in terms of your IA plan. Do you just do bespoke internal audits when it comes to ESG, which are really important? How do you integrate it into your existing plan, I think is really important, but also capability and experience.
Mm-hmm.
So you and I are both accountants. We have a very similar mindset, but one of the first things that we did a couple of years ago when we started on this journey was, recruit climate science expertise and have that specific domain from a carbon perspective that could speak that language and help inform us, but also our clients in that regard. So I think looking at your own teams, the methodology isn't too different. You're still looking at governance. You're still, developing a risk and control matrix. You're still performing audit procedures. But I think there's certain knowledge rather than the skills that may be required. And I think upskilling your current team, there's a multitude of courses that are available out there, some of which you can get funding. So the likes of Sustainable Finance SkillNet in Ireland, you can apply for funding if it's related to sustainable finance, which I think is really interesting. But also looking elsewhere in the market for STEM-like expertise, or looking elsewhere from a third-party provider that could provide support if you're a small organization and needs bespoke expertise and you don't have the capacity to actually recruit somebody full-time in that regard.
Yeah, I mean, it may evolve maybe more from a skills perspective that in time, all internal auditors have a certain element of ESG knowledge and skill. But I think right now it's a bit like cyber. You don't necessarily run off and hire loads of cyber specialists into your internal team. You source the specialism when you need it.
Yes.
It's probably the same with ESG. But I can see even like that evolving in time that there probably will be ESG expertise in the team, but maybe not right now. Okay, so what other challenges are there?
Data, massive challenge. And there's a couple of things on this. Data it's not linear. Climate change is really difficult to predict. The data is very different. The risks that materialize from a climate change perspective may not necessarily happen in the next 5 to 10 years, which is a strategic planning process cycle. It could happen in the next 10 to 100 years. So how you alter your business model today through scenario analysis, etc., is really, really important. But also the range of data providers that are out there are often inconsistent. And there is regulation pitted further down the line in terms of data and how that's sort of managed and reported. If you were to look at one data provider for one organization today, there might be more of an E focus. And if you were to look at that same organization using a different data provider, very different. So I think how an organization defines its data sets and what it looks at is really, really important from an IA perspective. And having the methodology around that, I think, is
I can see some questions coming up there on data, and I suppose I just warn everyone, and I think you're going to agree that when we do work in this space, especially the work we're already doing around assurance, much of the data currently is in spreadsheets.
Yes.
And I mean, we don't like spreadsheets normally, and it's no different for ESG. And I suppose there is a transformation needed, I would say, in ESG data, because ultimately this is going to be reported to stakeholders in the EU, the US, etc. We need to be confident around the data. So there is a job of work to do there.
Yeah, and get started on that now. And it's not there is, there will. From a CSRD perspective, there is mandatory reporting requirements in a digital format. So the more streamlined that can be, the better. So I think there's loads of tools out there that organizations can leverage, some of whom we partner with already, whether it's at the back end or in terms of core ERP systems. There's no one-size-fits-all tool. It really depends on the organization. But I was also at a conference a couple of months ago, and a payments conference, and somebody mentioned that ESG provides one of the greatest open source data opportunities. The data that a financial services institution needs from its corporates are the same for multiple financial services institutions. So how data could be streamlined or centralized could be an interesting evolution over the course of the next couple of years.
Yeah, I think it's an area of real focus now, as we head into this reporting world. Okay, what other challenges, Mark, should internal audit be cognizant of they go about their work?
So I think the third one is conduct. And what I mean by conduct is greenwashing, effectively. We've had a multitude of conduct related and high profile issues in the market over the course of the last couple of years. So the likes of PPI, mortgage tracker scandals, etc. It wouldn't surprise me, unfortunately, if the next big scandal over the next couple of years, and we're already starting to see them already in the market related to something related to greenwashing, effectively, which effectively means reporting green or more sustainable when you're not. So I think being cognizant of that through your internal audit as a key risk is really, really important.
Yeah, I couldn't agree more. And I think that that's why internal audits do have a role to play in the reporting piece, even though it's not the first line's job is to report. The third line definitely has a role to make sure that the backup is there, what is being reported, and the assurance then comes in on the back end to just kind of solidify that this thing is bona fide.
Yeah.
So I think that's really important. Okay. Any other challenges you want to point out?
I think the fourth one, and it's probably, you know, through our conversation, is the pace of regulation. There is a litany of acronyms, and I hate using this term, but the alphabet soup of
But you use it all the time.
but I use it all the time, and I say that when I say it. I just can't help myself. But you know, there's the CSRD, there's the SEC regs, there's the ISSB, there's TCFD, there's going to be TNFD, which is focused on biodiversity and nature-related financial risks, which will be a key focus area in 2023. Just to point out, so the pace of change is radical. And if you are a global institution that is based in Ireland or listed in the US, or a significant subsidiary here, and has an operation in the UK, you could be hit on multiple fronts. So I think the pace of regulation, and I think that's really important for IA to just get hold of and get grasp of.
And do you think it will, you know, kind of become more aligned in time? And I know you've touched on this briefly already, but I mean, it is a concern for business to have this burden of multiple types of frameworks and multiple mandatory reporting requirements coming at them.
Yeah.
So, you know, is there any trajectory in terms of the alignment and bringing it all into one?
Yeah.
If that's ever possible, even.
Yeah, like I think there's always going to be differences. Like we see that with US GAAP and you know, global standards. So I think there's always going to be nuances and differences. And my prediction is we're going to get to a point where there are varying regimes, but there's an election of some sort, and potentially like some sort of passporting effect whereby there's congruence between the various regulations. So you may elect to report through SEC requirements, EU requirements, which meets the standards of the other requirements as well.
Yeah.
But I think that we're still a long way off in terms of that being agreed at a policy level.
Okay, so where to next? Okay, Mark. So here we are sitting in a world where there's a lot happening, there's a lot coming down the track. So kind of what's next up for organizations and then for internal audit as they look to get involved? So
mandatory disclosures, that's going to continue. So we had SFDR, which is the first product related one, the EU taxonomy and CSRD, and depending on where you sit, other regulations are going to hit. So I think that's going to impact organizations over the course of the next year, and also IA's role on how they support that going forward. And we recommend some kind of readiness there, I suppose, is what we're some sort of readiness now to help your business and organizations fill the muscle in terms of future reporting and identify gaps now. Yeah, and we're not suggesting go out and do full-on audits in this. We're saying take the more advisory approach. Exactly. Work with the business, work with the first line, and help them all get the job. Yeah, the business has so much going on at the moment. Yeah. And you can see that there's a significant uplift required. And I think IA's role will be very helpful to come in on that readiness perspective. And then once implementation has concluded, then there's a role from the assurance piece as we move into more mandatory assurance from an external audit perspective as well. Because one of the things we see, you know, when we're doing assurance on things like green loans and sustainability linked loans, and the likes are going down here and so forth, is that internal audit could really help the business understand what an assurance engagement would look like. So when you do end up having a third party come in and do assurance work on whatever disclosure you're making or whatever assertion you're making,
that internal audit can really advise the business on what that looks like, what that insurance piece of work would look like, that they're going to look for evidence, they're going to look for supporting documentation. So that, I think that's really important.
All the
Because ESG people wouldn't be subject to financial audits normally, so they wouldn't know what to expect.
Exactly, and you know, I always bring it back to the principles of assurance or auditing, whether it's external or internal audit. You know, you're looking for something to be traceable, transparent, accountable, and I think those principles, and there's probably others as well, are still fit for purpose when it comes to ESG. And I think using those principles in terms of that readiness piece is really, really important. If everything is built in spreadsheets for future reporting, you know, it's not that traceable. It's often not accountable.
Yeah.
It's often incomplete. So I think you know, and it's often not reliable as well. So I think those principles that you adhere to, normal reviews or audits, are still fit for purpose from an ESG perspective.
Yeah, absolutely, absolutely. Okay, so continuing on the discussion, so mandatory disclosures coming down the track, fast at us. So, you know, what other trends are you seeing?
Yeah, timelines are becoming more narrow and more scrutinized as well. TCFD and many organizations that are mandatory in the UK that need to report on that, have to report on that already. We need to report so next year as well. Obviously, CSRD will be coming into play over the next couple of years, so that's going to tighten timelines as well. And I wouldn't underestimate the lift that is required there. So I think mandatory disclosures coming down the line, but also the timelines is the second thing I point. Like it's going to happen soon. It may seem like a couple of years away, but you do need to build in readiness.
Yeah,
to help with that.
It's come at us very fast.
Exactly.
Yeah.
From another perspective, I think mandatory disclosures, timelines, but also there will be a spotlight on the role of assurance, given that there will be mandatory assurance over time. I think, you know, the spotlight on the role of the likes of internal audit or the third line play will be really, really important.
Yeah, and I suppose when we do assurance engagements already on some of the products, for example, that I've been talking about, the green bonds, the green loans and so forth, you know, there is this idea of the applicable criteria by which you examine subject matter, and this is very much ISA 3000 speak, but the applicable criteria that we're seeing around the subject matter, which would be the disclosures, are reliability, timeliness, you know, accuracy and so forth. So they're very specific criteria through which subject matter needs to be assessed, and I'm of the view that internal audit have a huge role to play to educate the business on how they can demonstrate reliability, timeliness, and so forth in relation to the subject matter of CSRD, of TCFD, of anything else where assurance is needed. So I think there is a massive role for them to play, and hopefully that's the one message that, you know, the attendees today get from this, Marc.
Absolutely,
really
yeah. So.
Okay, so with all of that, maybe just to kind of bring it back to kind of what are the kind of the final takeaways you'd like our audience to have from our session today in terms of the next steps, the go forward, the kind of trying to, you know, crystallize what they need to do to support all of the above.
Yeah, so I think we've mentioned a lot of them already, and you know, we discussed this before, and trying to keep it really practical. You know, what are the 3 to 5 things that you take away following this from an IA perspective? The first one is governance, you know, within your own team, but also looking at the organization that you're part of from a third line perspective. Do they have that accountability at board or senior stakeholder, senior executive level? Is there a sustainability committee established, depending on the size of the organization? I think focusing on governance of this and how they're managing the future reporting and requirements and risks and opportunities is really, really important. Just
on the governance piece, on boards now, are you seeing and would you expect to see an INED with specific responsibility for the ESG agenda?
We're starting to see that.
Okay.
So we're starting to see that particular board member, and there are initiatives out there. So we're involved in an initiative called Chapter Zero, which is a forum of the World Economic Forum. I'm the company secretary for the local chapter here. We're in collaboration with HSBC, Chartered Accountants Ireland, the Institute of Directors, and IBEC in relation to that initiative. And that's effectively a forum for independent non-executive directors to upskill on issues relating to climate change and how they can challenge their boards on those issues, because ultimately they're at the coalface of, challenging boards at that strategic level. So it's really, really important for those stakeholders to have that ability. We have over 230 INED signed up to Chapter Zero Ireland. So I think as you consult with your audit committee members or chairs of audit committees, you might want to mention to them that particular initiative, because I think it's a really good one to sign up to.
Yeah, no, excellent. And just with governance as well, sometimes with strategy, even if you take ESG out of it, organizations are great at writing great strategies and having, fantastic ambitions and mission statements, but it's the implementation of that and that can present the challenge with all of what we've just talked about. And it's the reporting back on a timely basis to the board on the progress on the achievement of the strategy. So how are you seeing that work currently? And do you think there's room for improvement there?
So there's definitely room for improvement. And there's some statistics in and around that. Particularly within financial services, the likes of the Central Bank of Ireland and regulators in the UK have noted that net zero targets have been set in the financial services sector, but transition plans and how they're going to get there, there's still a lot of work to do, significant work to do in terms of setting science-based targets, how they're agreed by the board and how they're ultimately reported up to the board. It's all very well setting a target for 2030, but then coming to 2030 and going, oh no, we didn't make it. I think how the achievements of those targets are really, really important. So there's some good guidance in the UK. They've established a transition plan task force that have, if you do a search for that, they have issued guidance in relation to how to set a transition plan, which I think would be useful for all sectors and not only financial services as well.
Yeah, so if governance is a key takeaway, I would concur with that. And I would say internal audit have a role to play to evaluate if the governance was robust enough in terms of board responsibility, but also in terms of that transition plan and reporting up.
Absolutely,
as I say, even with standard strategies, you find that the timeliness for reporting it can be subject to improvement, and you need to flag where you're not progressing well early, I would say.
Absolutely.
Okay, so that's one takeaway. So talk on and some other takeaways.
Another takeaway, again, I've mentioned it a couple of times, is integrating it into your existing internal audit plans. There was another statistic that I read a while ago from the IIA, Institute of Internal Auditors in the US, that stated that I can't remember the exact percentage, but it was very low, let's put it that way, in terms of how the extent to which ESG was integrated into IA plans, I think for 2022. So I think, again, thinking about it like fraud, data, and those transversive risks, the extent to which ESG related matters can be integrated into your existing internal audits, procurement, internal financial controls, governance, strategy. I think there's many that you can think of that it would be hard to argue how you can't have it as one consideration or one thought point from an ESG perspective. Yeah. So I think that's a quick win.
Yeah, and I agree with that, because actually was on an audit committee yesterday and we had a massive discussion on the focus of internal audit in 2023, and Deloitte do publish the hot topics and would have done the internal audit hot topics for 22 and will be doing it again for 23. And ESG has been a key topic of consideration for audit committees globally. And I think we do need to build it more in. And I think it's going to be like analytics. It's going to be part of, all or most audits going forward. So that's a definite takeaway. Okay. Yeah.
So I think a third takeaway is focus on the organization's materiality assessment, and whether it's double materiality or singular materiality, but how the organization has identified risks and opportunities from a sustainability perspective, because that will influence where you focus from an impact and livelihood perspective, which I think is really, really important. And also scrutinize the methodology of how they developed that materiality assessment to ensure that it was robust. So I think looking at how an organization develops its materiality assessment, but also if the organization has done scenario analysis. So looking at one particular scenario in 2100, which may be a 1.5 degree world, which is quite transitionary in nature, and the risks and opportunities that apply to that. But another scenario may be what the world looks like in a 4 degree world by 2100, and the risks and opportunities that plays out for the business model strategy for your organization. So has your organization done that materiality assessment, or has it done scenario analysis? Two big chunky pieces from a sustainability perspective, and how that can influence your future audit plans as well.
Yeah, and Mark, is there guidance there for the actual conduct of a materiality assessment? Because it's a very different sort of assessment to what we all, us accountants, and sorry to anyone who's not an accountant, but most of us internal auditors are accountants. So is there guidance on how to do materiality assessment, in an ESG context?
Yeah, so the GRI, the Global Reporting Initiative,
Okay.
another acronym out there, has issued guidance in relation to materiality and materiality assessments in terms of which are consistent with how the future will look like from a double materiality perspective. From a double materiality perspective, looking at the ESRS, the standards that have been developed by EFRAG, which is the group that are developing the Corporate Sustainability Reporting Directive, and what regards that, have issued there's guidance or notes in relation to materiality there. So I think pointing in the direction of those two items, you can't go too far wrong from those.
Yeah, and I think internal audit again have a role to play here to ensure that the materiality assessment is sufficiently robust from a stand-up to scrutiny should any other third party come to scrutinise it, and when you have stakeholder reporting built off the back of it, because it is the start point really.
Absolutely, and was it done on the back of a matchbox, or was it was it traceable? Was it accountable? Yeah. Was there appropriate reviews? And
our experience is there's lots of stakeholder engagement as part of the materiality assessment. So lots of inquiry and interviews with your customers, your suppliers, your
internal plus external.
Yeah, and internal plus external. So all of that is normal subject matter that internal audit would be able to get a good handle on and ascertain if it's robust or not. So I certainly think there's a role to play there. Okay, so any other takeaways?
Yeah, so I think leveraging frameworks that are out there that are most relevant from an IA perspective. So I think if you're in internal controls or internal audit, you'll be aware of COSO internal control frameworks and the COSO ERM framework. COSO have developed an ERM framework specifically for ESG related matters.
Very interesting.
So looking at governance, strategy, risk management, implementation and performance metrics.
Very TCFD sounding, but
very TCFD sounding, but by coincidence, because it does follow the COSO ERM framework. So it is closely aligned to the TCFD as well, but there's useful checklists within that and what to look out for. So if you're stuck for what to include within your RCM, your risk control matrix from a testing or a work program perspective, again, COSO very reputable. You can't go too far wrong from incorporating something like that into
and we can see with some of our US listed clients that there is the need now to build an ESG RCM, from a US disclosure perspective. So that's probably a good reference point for that actually.
Absolutely.
Because those RCMs would be COSO aligned ordinarily. Okay, and maybe a final takeaway for us, Mark?
Yeah, final one is capability, team, skills, and consider that within your own team, but also a key consideration within the organization that you're the third line for as well. Do they have the requisite skills and knowledge to report, implement, adapt strategy? Do they need skills or knowledge in other areas, and what you may need within your own team as well, either from an upskilling perspective or recruiting, or bringing somebody in to support.
Okay, and just responding to the queries that come in on data, in terms of the capability around data and systems, I think that's also something that will need to be enhanced.
Absolutely.
As well as obviously internal audit's own capability, but I think there are tools needed to address the subject matter and what we're looking for.
Absolutely, and again, we're seeing the structure or the reporting structure within organizations change. And we're also seeing a sustainability reporting manager as a new role that's coming quite it's out there in the market. Many organizations are taking on. So I think we're going to start seeing changes like that. It's going to be nice.
Okay. So I suppose a lot going on, a lot of challenges, definitely opportunities, a lot of ways internal audit can get involved, add value, advise, support, and assure. So overall, Mark, with everything that we've talked about, are you hopeful for the future in terms of ESG and all the ambitions we have? around ESG and in particular around the climate piece for 2050 and net zero? Are you hopeful?
Yeah, I think it's slow. I'm cautiously optimistic. When I started on this journey a couple of years ago and focusing on sustainability and sustainability risk, it still is nebulous at times and nascent and sat within the CSR function. We've seen that shift.
Yeah.
CEO, CFO, the CRO, at that executive level, and with mandatory reporting coming down the line, and regulation, we'll see that accelerate. But I don't think organizations should use that as a tick the box exercise. I think it's really important to understand the risks to your organization, but also the opportunities, new products and services, new markets to step into, more resilient business,
new technologies,
innovation, and new energy sources. So I think looking at the opportunities as well as the risk is really, really important, but I think there's still a long way to go.
Okay, well, that's great. It's always good to end on a positive note.
Absolutely.
So lots done and lots more to do, as they say. So genuinely want to say a big thank you to you, Marc. Yeah, it's been a great conversation, lots of great insights. If there was an audience here, I'd ask them to applaud, but they can applaud at home and in the comfort of their offices or homes. So thank you again, Marc.